We had worse days than today in recent past, but today was bad because literally for retail there was no trigger available. US markets were looking good, Bitcoin was high, Nasdaq created a new high. There were no major bad cues when the day started. In fact, most indices, stocks, they started hitting highs very first thing in the morning. Retail did not even realize that something was wrong till about 10:30. In fact, most people didn't realize the reason till about 5:36. When this circular came out, I didn't even try to understand it. There is some tightening going on in the markets literally every second day. But these things happen in the middle of the week. FPIs, FIs, they know it because they have keen ears and very good noses. Retail does not know it. Retail falls prey to it, and they realize at the end of the day something was terribly wrong. See here, Nifty continues down, opened at the highest point of the day. Who would know what is happening with FIIs, FPIs, what circular is coming out later in the day? That 5% of the world knows. Everything red. And today volumes also picked up. Yesterday at least volumes were low. And there is a lot of panic right now in retail. People are very paranoid because they are still on losses and they don't know whether market is going up or down. If they sell now, there will be losses. If they keep invested, then they don't know whether markets will go up or they go sideways. So today I'll try and decode the retail panic. What are the things that are happening with retail right now in terms of psychology? And I'll try to keep it a little light only on the humor side. I can't keep this light, however. Only one stock up, Cipla, and very deep reds across the board. Only red towers, that two big ones, no greens. Only Cipla was up. Wipro, Tech Mahindra, Apollo, and HUL, they were down least. What was down most was TCS, and it took the throne away from Reliance from the bottom stock today. Reliance was number 2 from bottom. Next was Airtel, HDFC, and L&T. 1, 2, 3, 4. 5 was not far behind. Next 50, not much better. Very little greens and a lot of deep reds. At the top, we had United Spirits, Bajaj Holdings, Macrotech Developers, Shree Cement, and Zomato. When I talked about Loda a few days back also, they are more in the top than not. What was down? Motherson Sumi, TVS Motors, Union Bank of India, Cholamandalam, and Pidilite. Very few sectors and stocks in the green. See here, only 7 sectors. And the large caps were concentrated towards the end. Power, automobile, metal, software, telecom, oil and gas, banking. Investment banking continues to be at the top, though it was not such a good day. That is because of this green trend. Now these greens will start falling off. Next best is real estate. Look at the trend of greens. In fact, tomorrow we might see real estate moving further up to number 1. Nifty, Bank Nifty, Next 50, Nifty IT, all down continuously whole day. There are one or two attempts to recover, however, they got sold into immediately. This was roughly around 12:30 when everyone attempted a recovery. Look at the pattern of Reliance. Today, worst performance was from banks. Bank Nifty completely red. Same with private sector banks. Each and every bank down. Not very different for PSU banks, only SBI is green. And today the cuts got bigger, 3% kind for many banks. Volumes continue to be low, however. Investing is getting very stock specific. There is one stock probably that is picked up every day. Today it was a turn of Edelweiss. BSE, CDSL, and 361 made highs early in the day. In fact, till about 10:30, investment pack was looking okay. The fall came after that for investing. See this particular middle tier, they are very close to 52-week highs. Only Motilal Oswal, Angel One, and JM Financials, they are far off. And all three of them are portfolio stocks for me. Why? Because I have sold off everything else, and you'll see that in the Nugget section today. NBFCs fell with high volumes today. Biggest cut was in Shriram Finance. Only Bajaj Holding was up 2.2%. In IT today, mostly product companies were up. Zomato, InfoEdge, Policy Bazaar. In services company, Persistence PE is getting absurd, 80. Coforge, at least there is one M&A activity, so this PE may get rationalized. Unless there is a really big order that I'm not aware of that may come in this results, persistent is looking really, really expensive. Telecom was weak and the cuts were big, more than 2%. No place to hide in auto as well. The volumes were high. Auto ancillary, the falls were even bigger. Sector of the day, defense, DCX up 9%, Mazgaon Dock 5.6%, and Zen Technologies hit another high today. It was up lot more, around 7%, but then it corrected towards later part of the day. See here, Zen fell after this. Nalco was up, but the metal pack was looking really bad today. Petronet LNG, like I mentioned yesterday, the news from Qatar, it was up 1%. This stock could go up more, but the entire sector was bleeding. Largest fall came in Oil India, followed by Reliance, that was down nearly 2%. And Reliance is now just 2% away from making a new annual low. Everything red in power as well. The Adani twins, Adani Energy and Adani Power, they are red. Varian Premier corrected today, but Premier hit another high. See here, first thing in the morning. Borosil Renewable was up 5% and Suzlon hit an upper circuit. The alcohol stocks were in good mood, United Breweries and Radico. Associated Alcohol, which I sold yesterday, that was down 3%. Varun Beverages up a little, but it is in the green zone. Tata Consumer hit a fresh low. Non-edibles were actually worse. Asian Paints and DMart hit fresh lows. Page Industries hit a new high, however. Only PN Gadgil was up 1.5%. Railway showed some recovery yesterday, however, today it was back to red. 2% kind of cuts in most stocks. In the Tata Group, IHC made a fresh high, Tata Consumer made a fresh low. Adani Energy, Adani Total, minor green in the Adani pack, rest everything down, including the financiers who have lent money to the Adani pack. Nasdaq yesterday hit a new high. However, most of the non-American markets were trading with little pessimism today. And Bitcoin is on steroids. It is actually more than 1,07,000 at the time of shooting this video. I just checked, Bitcoin crossed 1,08,000. And Ethereum also yesterday night created a fresh high. This was stuck for a while. Markets were not good. All the indices in red, and that too deep red. That's because FI sold. In fact, the sell number was pretty high today, 21,000 crores. They bought 15,000 crores also. That is why this number is 6,400 crores. DIs per size is limiting now. So they bought less, 50%, actually lesser than 50%, 2,700 crores. Both numbers for FIDI are still in the green, net 12,000 crores for this month. Now, government has given itself a clean chit that the Q2 GDP slowdown was a temporary blip. Don't worry, all is well. And US Fed jitters, weak rupee have been attributed to today's fall. What is new in this? Nothing happening in the US which is not anticipated. The interest rates are expected to be cut. Nasdaq is hitting new highs every day. Bitcoin is hitting new highs every day. Employment numbers are okay. What is the US Fed jitter? Weak rupee. Who was expecting rupee to not be weak? The writing has been on the wall for months now. Another all is well came from IT companies. They have stopped selling AI suddenly, it seems, and they are back to digital transformation, which was a theme 5 years, 6 years back also. And one pack which is definitely saying all is not well. Oil markets are shifting gears downwards. Middle East is pretty vocal, OPEC is pretty vocal that oil demand is low, 2025 will not be a great year. And in my opinion, gold and silver in India are showing wrong trends completely. Rupee is weakening, yes. International gold and silver prices have been inching up slightly. Up and down, yes. But India has this double impact because of the weakening currency. Gold should go up. Also, silver. Seems to be something wrong in this pricing, and one fine day you might see 5-6% kind of up move suddenly. In the US markets, Tesla yesterday was rocking 6% up. It is closing on 1.5 trillion and Apple is closing on $4 trillion. Not much in terms of my trade for the day. Eid Perry, the profit was 6% in less than 2 weeks. I sold this. I tried a trade in CG Power, but it was not working out because markets were in general down. The stop loss got hit and I closed the position. Slight loss here. Overall, a profitable day. No net new. no net new investment. Retail is in panic because markets are in no man's land. Retail portfolios are down, already in red. They don't know whether markets are heading down, going to consolidate, or going up. There is no trigger actually visible to take markets up right now. Government is in no mood to give any sops to the markets for sure. The tightening, which is good eventually, right now is in overdrive. And retail does not know how to react because they don't know when it will end, how it will end. Now, investors, they are of various kinds. Long term investors, these are people who say, I am buying for the long term, 10 years, 20 years, fill it, shut it, forget it. Most of these are SIP investors. They typically don't buy stocks. It is very hard to see stocks in profit and not sell them. SIPs in mutual funds, ETFs, you can accumulate them to any extent. Medium term investors is a special category. These were never supposed to be medium term investors. Most of them are trades which went wrong, and those trades were moved to investment category. I'll not sell it on losses, I'll keep it for medium term. I'll wait for losses to recover. There is a special category of IPO investors. These are the people who invest in IPO thinking that we will buy a great company at IPO and we'll keep it for long term. The IPO investors typically are totally lost because in IPO, a good company, you get very less or zero allocation. If you get allocation, that the debut is not usually good. Traders again have various categories. FNO, maximum tightening has been happening in this particular category from SEBI, and very rightly so. There was too much froth, too much manipulation. The second category is intraday, typically people who buy in the morning or sell in the morning and cover the trade, close it out by end of the day. Then there is something called swing trader. This is a loose term and most people have different definitions for it. My definition is people who go with the flow. Sector, stock, which is in momentum or there is some upcoming news, you buy this, you let the momentum swing and you make 20-30% out of it and move out. This is slightly medium term, 1 month, 2 month kind, and the profit expectations are also slightly higher, not 5-10%. Short term is typically 1 day to 1 week maximum. But beyond that, if you have not made money, you will probably not make money in that trade. IPO is also trader. People who buy IPO to sell it on listing day. These people make very little real money, maybe percentage is higher on listing day because allocation is low only. The next category is risk appetite, low, medium, high. Now, most investors say my risk appetite is low, and most traders end up with a high risk appetite. That is because the losses are literally unlimited. I've seen 30-year, 25-year people saying my risk appetite is low, income is reasonable. And I've seen people with 50, 55 age playing with very risky instruments with nearly full capital or very high capital. Risk appetite is relative to your age and your income. Can you recover from a loss? How much loss can you bear? Now, some investor habits which are very important to understand: self realization, sticking to favorite sectors. You might have seen me talk about microfinance, my favorite sector. I am in huge losses. So I am no saint. I am suffering a lot because of these investor habits. That is why I am writing them. I have learned them the hard way. Only making money on long positions, buy low, sell high. There is no other way of making money in retail because you can't sell in advance without owning unless you are doing FNO. And here I'm not suggesting you go into FNO along with investment at all. If you are not making money, what will you do? You try to add more money and you wait for markets to give at least some returns. Now, markets, if they are heading down, there is no point in adding money here. Averaging versus laddering. Not trading with investments. Most stocks, the good ones also, they are oscillating like this. In the long run, they will make money. But there are stocks like, for example, HDFC Bank. For many years, it didn't make any money for investors. Reliance has done that a lot. TV recommendations, YouTube channels, Instagram, there are a lot of sources. If you are taking a decision based upon that recommendation, you are at least 2 days behind, 3 days behind. And most people who were to make money, they are on the way out. You are typically the currency for the exit for all of them. Trusting promoters, especially if promoter generations have changed. Take it with a pinch of salt, especially if promoter holding has gone down. Closing eyes to bad results. I've done that a lot in many small cap shares. You cling to that stock. You don't sell it off because you are already 5, 10, 15% down. Markets have gone up in general in the last 5, 6 years, especially since the pandemic fall. What would you do? You have to buy high only. Stocks are going high, sectors are going high, markets are going high. When markets fall, for example, 4th of June, or maybe the Adani fall, how many people attempt to buy on that day? What if it falls tomorrow? I'll be out of money. And tomorrow the entire thing has recovered. Averaging falling markets, I've talked about it many times. You don't know the bottom. You can keep averaging, you can keep blocking money. You never know when to stop. And especially if that stock is making losses, there is no point in blocking capital. Always ladder, don't average.